Okay, y'all, we are back. I know it has been a while. Life has been happening. So I had to hit pause and reset so I can get back into doing YouTube videos. Just know that this week we're going to have a couple of grants that I'm going to put out there. We're actually going to do another session this Wednesday, same time, and we're going to be talking about taxes for the trucking industry. As always, if you get anything out of this video, if you can like it, that would be appreciated. Subscribe to keep up with everything that we're going to have coming to you. And then leave us a comment and let us know, what you like, what you would like us to change. And then, of course, I'm going to put Miss Fulton's information in the description as well as the comments. And I think that's all as far as my introduction. Oh, I'm going to make sure to pay attention to see if there are some comments. As always, I'm still working on that. So you can give us a brief overview of who you are, what you do, and how you got here. And again, as always, thank you for your time because we definitely appreciate the information that you are sharing.
Thank you so much for having me. So this is going to be very, very brief. So darn me. So my name is Dorcas Fulton. I'm the owner of Top Tier Financial and Business Solutions, where we simplify the lives of business owners through business and tax solutions. Simple as that. Basically, we handle the entire back end of your company. We specialize in the trucking and real estate industries, but we started off in general services. So now we're niching down. But in all, I have been in the field for about 5 to 10 years now. I've been a business owner for 3 years, but before then I would do just like family members' taxes. I would do family members' business structuring as well as mine. So I built a few businesses before I actually started my business. I've just always been a numbers girl, but that is a spiel about me and my business. And you can catch me at toptierfbs.com, or you can schedule a consultation with me at toptierfbs.com. And on any platforms, you can reach me at #toptierfbs.
All right. Thank you for that introduction. And this session, we're going to be talking about employee versus independent contractor, which is W-2 versus a 1099. Yeah. Also, let me put this out there. I was supposed to do a video when I got to 1,000 subscribers, and it kind of got away from me because within the next week, we're now at 2,600 subscribers. Mm-hmm. I am going to do a Zoom celebration. I believe that my Zoom account only allows for 100 participants, but we're essentially we're going to gather, one day in the evening, bring a cocktail. We'll be able to chat, talk about different grants and other things that you would like to see on the channel. Once I get that organized, I'm going to make sure that a link for individuals to sign up will be in the description box as well as the comments. And of course, once 100 people are in the room, then unfortunately I won't have any room for anyone else. Now, before we talk about it from the accountant's perspective, we're going to talk about briefly, when you're thinking about, is this person an employee or is this person an independent contractor? The first question you need to ask yourself is, how much control do I have over this individual and how they perform the work? Now, I work for an employer, therefore they provide me with everything I need to perform the job that they want me to perform. Meaning that if I need an office chair, because I work remote, if I need a desk, if I'm like, my back is hurting, I need a lumbar support. They also have control over my time. They tell me essentially what hours I need to work. I have deadlines that I have to meet. I have to essentially show up to whatever meetings that are mandatory from that employer. When you're thinking about an independent contractor, essentially you give them the work, but they kind of can perform it in whatever capacity. And when we say timeline, if you say the deadline is in 30 days, they could possibly wait until day 28 in order to complete it by day 30 versus if you're with an employer, you're going to have to give them updates. You're probably going to have a bunch of meetings. They're going to tell you how to perform the job. And then also the independent contractor normally comes to the table with their own supplies. Own supplies doesn't mean just pen and paper. It could be their laptop, it could be their vehicle, it could be their tools, it could be anything that is needed to perform the job. They should have it. The only thing that you're getting essentially from them is a service. And for that service, you're not going to be responsible for a lot of the other things that you would be responsible for if that person was an employee. Tell you a short story, because sometimes companies, I want to say small businesses, just let's be honest, will try to skirt through and say that somebody is an independent contractor when in fact they are an employee, which can get you in a whirlwind of trouble. And Ms. Fulton will talk about it from the tax perspective. I was working with a client who had a gym, and she had an independent contractor that offered classes at this gym. Let's say the class was a yoga class, because I don't remember the exact class. However, the employer, my client, dictated when that person showed up, what time she could show up, what classes she taught at that gym, as well as providing everything that was needed, whether it's mats for the participants. The space obviously was being provided. And at first, everything was going smoothly. And I say everything is good until it isn't. So this person was labeled as an independent contractor. No taxes or anything was being taken out. And what happened was a dispute arose between the two individuals. And the person that was labeled as an independent contractor reached out to the Department of Labor and indicated that they were an employee and that they were not being treated fairly. Once there was an investigation, it was founded that, yes, this person was an employee, was never an independent contractor. And unfortunately, my client ended up having to go out of business because of all of the fines, unemployment, all of these things that wasn't being paid, because each individual was being labeled as an independent contractor when in fact they were an employee. So it is very, very critical to make sure that you are labeling the individuals around you properly, which is what we talked about in one of the grant applications, where they said you needed 2 or more employees. However, they were labeling your contractors as employees, which can be confusing. And if you don't know, you're going to assume that it is okay to say that, intertwine the words and not understanding the legal ramifications. But you can essentially, especially as a small business that doesn't have the financial backing to deal with such fines, you can end up losing your entire business just by mislabeling your employee as an independent contractor to avoid the IRS. And the IRS, even if they don't find out, if there's a dispute, that person is going to go to the Department of Labor. Trust and believe, because now they're upset.
Yep.
So if you can start with
I have a question for you.
Okay.
So, the trucking industry is very finicky, especially when it comes to understanding who's an actual independent contractor and who is a W-2 employee. I'm asking you because I want your expertise on it. So say for instance, this truck driver is the owner operator, so he owns his own truck, but he or she actually is running for a company, but the company dictates what loads they carry, what time they need to be there, and then when they can take off.
So in that instance, because this is not legal advice, you're going to retain a lawyer, so please do not rely on any of this, okay? This is not attorney-client relationship happening right now. What I will say is that in that instance, it's going to be sticky. More likely than not, they will be an employee. And the only reason is because even though they're showing up with their own truck, they have no other control over how they perform what they do. So actually, like the IRS, Department of Labor, and when I'm actually going to launch a boot camp course soon, sooner rather than later. And we're going to go into more detail, but there's 26 different items that are looked at to determine if someone is an employee versus an independent contractor. What I pulled out is one of the 26, which is the most critical. You have to see what is the level of control, but there's 25 others that you would then have to say, okay, we have level of control. Let's look at the other 25, right? But in this instance, and we can talk about it in more detail on Wednesday when we talk about the trucking industry, my knee-jerk reaction would be, that's an employee because they don't have any control over their time, and control over time is one of the things that they look at. So when you think about somebody that's in the trucking industry and they drive for Amazon, for example, and you have your own truck, with Amazon, you pick everything. Amazon doesn't dictate anything. You go to their load board, you say, I don't want to work today, so you don't work, right? They'll have hundreds of different loads you can select. And you're literally picking your own schedule. If you want to work on Monday, you do. If you don't, you don't. So in that instance, they are clearly defining that line to make sure that they don't open the doors to potentially be sued by someone that's claiming that they are, in fact, an employee. And you also have to think about if they have control over that person's time and they say, you know what, I don't want to come to work today. What happens? Do they get terminated? Do they still get to work? So it's a lot of other questions before you can have a clear-cut answer, but just based on the fact that they have that amount of control over their time, the IRS or the Department of Labor would say, okay, we need to take a deeper dive into this because it's really sounding more like an employee versus an independent contractor.
Now, I know this is kind of like off into another arena, but does it matter whether it's in like a right to work state where the actual employee is, or does it matter whether or not the state is a right to work state or the opposite?
No, it doesn't matter, like at will employment or not at will employment. What isn't going to affect whether or not you're defined appropriately. Because if you're an employee, there's factors that has to be considered, right? You're looking at the factors only. The at will really honestly comes into play when it's time to terminate. And somebody said, you know, I was discriminated against. Of course, you can't discriminate, but if I had 5 employees and I was like, I don't really like her. Let's fire her. You know, he came to work kind of just sluggish. You're not needed. I can fire you for any reason or no reason, as long as it's not discriminatory, right? So somebody will then say, you know, they'll pull and say, I'm being discriminated against, because that's the only leg that they have to stand on when you're fighting and you want to file a dispute. However, if it's at will, I don't really got to tell you why I'm firing you. But of course, larger corporations are going to make sure that they do progressive discipline. And because at the end of the day, it's going to cost you more money to defend against the ELC or any type of lawsuit than it would be to just make sure it's a clean separation of employment.
Okay. Thank you.
You're welcome. I'm pretty sure somebody else might have had the same questions as well. So we're going to circle back, but I want to do this in 2 parts. I want to talk about, okay, if you're a W-2 employee and you're thinking about the taxes, what does that look like? And when I say the taxes, small business, not the actual employee. So if you're the employer and you have W-2 employees, what are things that you are responsible for? What are things that you need to think about?
So whenever you're hiring on people, as Ms. Ebony was saying, you have to take into consideration what exactly are they. So are they going to be W-2 or are they going to be independent contractor? So with a W-2 employee, you have to take into consideration unemployment taxes. Are they going to be full-time or part-time? You have to make sure that you're keeping track of everything that happens with that employee pertaining to the business. You also need to make sure that you're paying their Social Security and their Medicare taxes, which are your FICA taxes. that ranges around 6 to 7, maybe 8%. And then on top of that, you want to make sure that you're filing annual and quarterly reports along with paying into their payroll taxes, which is basically employment taxes.
Okay.
So what the tax really is as the business owner, you're going to pay half of what that employee owes in taxes. So essentially, you're going to pay around 15.75% of their taxes, whereas the employee is going to pay around 15.75% of their own taxes. That's why when they're on their W-2, they see, okay, so they took out X amount of money out of my money. This is the amount that I actually owed to the state for Medicare, not the state, to the federal government for Medicare, for Social Security, and for income taxes. Okay. Then on the other side, the employer is going to pay that same thing in, excluding the income taxes. They're only taking care of your FICA and your unemployment. That's all.
Okay. Now, what happens, because this has happened to me actually, what happens when the employer forgets to take out your taxes?
When they forget to take out your taxes, more than likely they're penalized for not taking it out. Okay. For one, they will end up having to pay the full amount. Okay. Or they can have a discussion with you where they can do like a back taxes, which you're not gonna give into that. But yeah. You're not gonna give into that. I didn't spend the money. No, because at the end of the day, you filled out the correct forms whenever you were hired on. Yeah. You filled out your state form, your state W-4, your state W-4 form technically, and then you filled out your W-4, your federal W-4 form. These are the two forms that they're going to need in order to pull your taxes. So as long as they put it into the system correctly, as you put it on your forms that you filled out, it should be pulling. If it does not pull, you need to talk to somebody in your HR department to see what's going on and why it's not pulling. Okay. But they can be fined because technically at the end of every quarter, they have to pay in the amount of taxes that they took out from your check. So all of this money should be in a separate bank account so that at the end of each quarter, they pay in your employment taxes. Okay. Now on the flip side, if I really have an independent contractor, what are things that I need to take into consideration? If you have an independent contractor, and this is the employer, well, not the employer, but the contractor that's subcontracting out. Yes. Okay, nothing. Nothing. Nothing, because whenever you have that 1090, whenever you have a independent contractor, you're not pulling any taxes out. You don't owe any taxes on that individual. Throughout the year, there's nothing that you need to do except for whenever you initially hire this person on. I don't care whether you're paying them $50, $10, $20 here, there, wherever. At the end of the year, you're going to need to create a 1099 for them if you paid them over $600. Okay. So from the initiation of hiring them to do to subcontract them out, you need to get them to fill out a W-9 form. Okay. The W-9 form has their name, their business name, their social security number or their EIN, their business address, along with their signature, allowing you to have all of this information. So then that is the document that you're going to need to create your 1099 NEC at the end of the year. Got it. So the W-9 is just so I can have the information to then complete a 1099. Yes. Okay. I never knew that. I knew W-9s are getting completed, but I had no idea the purpose of where they were going. So they're not going anywhere. It's just for my records. It's for your records. So that at the end of the year, you can complete this 1099. Actually, some accountants, I'm one of those. I will not write you a check, cut you a check or anything until I get a W-9 form, because that shows that I can then create a 1099 from it. Gotcha. It's a disbursement form. Now, what happens if
Now, of course, earlier we talked about my client who unfortunately lost her business. But what are some of the steps that are then taken from, the IRS, if you're an accountant trying to, unwind some things, if somebody was misclassified?
So essentially what will happen is, for one, they're going to want to see what makes them a independent contractor.
Okay.
So that's kind of going into more of like the HR sector. As far as the accounting goes, we not really, but the company will actually be fined for not classifying them the right way at the end of the year, whenever the situation happens. So we do get heavily fined for not classifying someone the right way.
So once you're fined and you pay the fine, is that it, or you monitor for a certain period? What else? Is there anything else that happens besides paying the fine?
You're more than likely monitored for a certain period of time, because they want to make sure that you are classifying the rest of your employees. They'll probably do a deeper dive into it also to make sure that everyone else is being classified the right way.
Okay. Now, what is the best, or let's not say the best, what are circumstances where it's better to have W-2 employees versus an independent contractor?
If it is someone that, it's a lot of instances, honestly, because you actually get tax cuts with employees. Whenever you create different benefits for employees, the business actually gets a tax cut.
And what are those?
Some of those are like if you create like a health savings account for them.
Okay.
If you pay into like their premiums. Or for instance, when COVID came out, it's the employee retention credit. So if you were able to hold on to your staff members, along with that, a lot of businesses were able to get subsidies for payroll. So it's a lot of benefits to have people on as employees. But the other thing is that if you need to control, that's a horrible word.
But that's the word.
It's the right word, but it's a horrible word. If you need to control what the employee is doing, when they are doing it, how they're doing it, then you need to go ahead and put them on as an employee. If you're that type of person, you need to put them on as an employee. If you're just looking for someone to come in and just do a job, get it done, get it over with, and then leave out, that's going to be like your 1099 employee. So it's really depending on what your needs are as far as what's better for you.
Okay. And then when we think about independent contractor, I'm just going to throw out some examples only because being on Facebook and seeing different entrepreneurs, and people are always looking for somebody to do a website, somebody to do a logo, somebody to do a flyer. These are definitely clearly defined independent contractors.
Yes.
Because you're telling them what you want, but you're not mailing them a laptop. You're not giving them paper for flyers. No. You're not doing any of these things. And they have time. You might say, I need it back in a week, but you're not checking in every day.
Yeah.
Because that can be frustrating.
Yeah, but if you do that, you're more than likely going to get canceled as a client.
Or you're going to get the bare minimum. They're not going to do the little extras that they might have been willing to do. So just think about that. And then a good way, I think, because I'm thinking like a lawyer, when you're drafting, you wouldn't draft a contract, but have a lawyer draft it or look at it or whatever. If you have a contract and you say this is an independent contractor, really look at the terms that you want in there, and then the services that are going to be provided. If when you read that contract to yourself, because you're always going to fill out that services piece, not the attorney. The attorney is going to give you all the legalese that goes around it. You can ask yourself, realistically, will I be able to relinquish all control? And will they be able to perform what I'm asking them to perform without anything from me, except for deadline and my vision? Yep. And if you can't answer yes, you probably have yourself an employee. And then also, employees normally are retained longer than independent contractors. Independent contractors typically have an end date and is normally pretty short. There can be longer contracts, but more likely than not, it's like 3 months, 6 months. Pretty short is not something that's essentially perpetual until I decide I don't want to use you anymore. That's when you're thinking about an employee. So definitely, like we said earlier, you have to sit and think about what level of control that you have, because it might seem good today, but again, once it goes bad, you don't want to risk your business to avoid paying taxes, right?
Exactly.
And paying those taxes, as we've said in previous videos, can open the door to a lot of different grants. If you notice, some of my grants require, now when I say they're not mine, okay? Because a young lady was asking how much money have I given to folks. I don't give any money out. I just give you information about grants that you can apply to. So the grants that I post, so let me rephrase, the grants that I post, a few of them require 2 employees, instead of just yourself. So really think about that. You want your business to grow. You want to be able to hire someone. And a lot of these grants are just for that, for companies that have reached capacity and they're trying to expand. Taxes, remember, paying taxes is not a bad thing. Paying taxes means you made money.
Exactly.
Exactly. A couple bucks.
And it's kind of similar to whenever, because I know a lot of new business owners or like kind of seasoned business owners, they're looking for like admins or administrative assistants, and they're looking to hire them on as independent contractors. Yeah. But you have to realize, like, what is this person actually doing? What list of items is this person given? Then on top of that, is there a time frame allowed for this? Or do they have to get this done at a certain time? Does it have to be done a certain way? You have to think about those things whenever you hire on your executive or administrative assistant, because that individual may just end up being an employee of yours, whether it's part-time or full-time. You might as well just hire them on as an employee. That way you do have some kind of control over when it's done, how it's done, and how it looks at the end of the deadline.
And I agree with that, because you got to think about the longevity of your business. And in all honesty, if you have an independent contractor, you're probably not their only client. What's going to happen is, if they have 20 other clients that's paying a little bit more, maybe they like working with them more, you might be at the bottom of the totem pole. And if you gave them 30 days, they might wait until the 29th day. But you probably would have liked to receive it before the 30 days. And if you have an employee, even if you give them a 30-day deadline, most employees are going to meet the deadline prior to that end date. Or you can say, this is an emergency, I need a quick turnaround time. So really think about how your business is going to be seen, and not always thinking that I don't want to pay these taxes, because with one employee, you're not going to be paying that many taxes, and you can have a part-time employee, right? So you don't have to have a full-time employee where health benefits kick in, certain things that legally you're required to provide. So even just having somebody that can work 20 hours a week or 25 hours a week would be better than having an independent contractor for something that you probably need to have an employee in that space, like an assistant. I know there's a lot of virtual assistant companies that are popping up nowadays, and that could be something that you can look into, but you also have to think about how many clients they have, and what is the capacity of that particular virtual assistant employer, or I don't even know what it's called, agency, virtual assistant. So all those things you got to think about. But again, and I'm gonna keep saying this, as small business owners that are going to be business owners, not just small, you have to get out of the mindset that you don't want to pay taxes, because the year before COVID, part-time real estate broker myself, and my company made some money and I had to pay taxes. I wasn't happy about it, but when COVID hit and they was giving out money and I was able to show,
exactly.
my process, I was happy to get all the grants that they gave me. So it kind of worked this stuff out. But if I was going to show them that my business was at a loss, what are they giving me grants for? I didn't make no money. So it wouldn't have made any sense to them, but they can see that I'm actually losing money now because I can't go into the homes. I can't make the money that I made last year in my business. So therefore, I was probably at the top as far as individuals that were going to receive the grant versus somebody that looked for all the deductions and didn't want to pay taxes. And now you truly need the money and you don't have access to it. So think about the future and the longevity of your company versus today and what you don't want to deal with. And you can speak more to this, Dorcas, but I know, if you think you're going to owe taxes, you can, I don't know if you set something up to pay it or something like that, if you want to go into that.
So, and honestly, as she was saying, the taxes are really not that bad for employees, because honestly, all you're paying is half of what their taxes are, because they're paying the other half. The really tedious part about it is you actually paying it in. So just all it really is just setting up a portal on irs.gov. It's an unemployment not unemployment, but it's a tax portal where you can pay in your employment taxes. And so that's all you would do. You could file a paper form for your form 941, 944, 943, and 945. Any of these forms, well, actually the 943 is for agricultural employees, but it's really simple. And if you don't want to do it, there are people out there that will do it for you. But it's really simple. It's really not that hard if you can grasp concepts really quick. But if you don't want to handle it, that is a service that we do offer. It's called our Back-End Boss Bundle, where we will actually pay in your employment taxes for you. But again, the taxes on employees is really not that bad. Plus, they add on credits to your taxes. So that's all a part of tax planning whenever you hire your employees on. They're an asset to your company on top of helping you save taxes. But as far as paying in your quarterly taxes as a business owner, this is, oh my goodness, this is like step one of tax planning. This is like the top 3 of tax planning. Whenever you have a business and you expect to owe over $1,000 in taxes, whether federal or state, because there is a state tax in some states, well, in a lot of states. You should pay in your quarterly taxes. And what is this? Your quarterly taxes are essentially the amount of money that you had, and then you take a tax percentage of that, usually around 25 to 30% of whatever you made in. Okay, so all this is just setting up a portal on EFTPS.gov. That's the electronic filing system for your quarterly taxes.
Okay.
And so you will just take January, February, March's revenues, add them up, take out 25 to 30% of that, and then that will be paid into the federal government. And you're going to do that every single quarter. Right.
Okay.
So that way, at the end of the year, whenever you file your taxes, then this amount of money that you've already paid in will be deducted from your tax liability at the end of the year, meaning it will be subtracted from your tax liability. So I'll say, for instance, you paid in $5,000, $15,000, $20,000 for the entire year. Now, mind you, whenever you pay in your quarterly taxes, they don't take into account your expenses. So this is just your revenue that you're paying in. So at the end of the year, you paid in $20,000, but your tax liability was only $10,000. So it's going to take away that $10,000 that you've already paid in, and you can ask for a reimbursement, or you can ask for it to be rolled over to the next year. So yes. So really, it's so beneficial to you to just go ahead and pay it in now, rather than saying, "Oh, I don't want to pay taxes," or they always trying to take my money, or, or I ain't
save
doing
money
that.
actually.
Yeah, like it's really simple. And the best thing to do while you're doing this, so that it doesn't feel like it's a lot of money, is every week or every day or every month. You can do it however you want to do it, but at least every month, you're going to take that 25 to 30% of income that you made and put that into a tax savings account. That way, that money is just going to add up, and you do that every month. And at the end of the quarter, you take that money out of that savings account and just put it into the portal and pay it into the federal government. And some states will allow you to do the same thing on a quarterly basis for them, because remember, you have federal and state taxes.
Mm-hmm. Now, what happens if, like you said, you can ask for a refund? So it doesn't just automatically, if I pay into this tax savings account or whatever, the online thing, and I file my taxes, they're not going to see that, okay, she only owed 10. Now I get a $10,000 refund.
You can request it. You will request it because it'll just stay in the system. So you can request to get that money back, or you can request for it to roll over. If you plan on staying in business,
we all do,
and growing your business. If you plan on doing these two things, just roll the money over, because next year you could end up owing double, and then you already have money into your account. Now, the only thing is that if you do set this portal up, you have to pay into it. So, yes.
So you can't just set it up and say, I don't want to pay. So no. What happens? They come after you, or what
if
happens?
You don't pay, you'll be penalized. If you underpay your taxes, or if you do not pay your taxes, your quarterly taxes, you'll be penalized for it.
Wow. Yeah. So that means you really have to be on top of your taxes. Because in my mind, honestly, when you were talking about this, I was thinking, okay, well, I'll guess how much I want to put in there every quarter if my books aren't in order. So, I mean, it could be a gift and a curse if you don't have your back end together.
That's right. So that's why it's important. That's the one of the top 3 things. Making sure your books are in order. You have to make sure that you're reconciling your books every single month. And reconciling means basically you're just going to take the bank statements, credit card statements, so on and so forth, and you're going to reconcile the credit card statement to your receipts. And then you're going to reconcile the credit card statement to your bank statement, meaning the amount that was taken out for your credit card statement is actually from the amount that was paid from your bank account. Then you're going to reconcile your bank statement to whatever bookkeeping software that you have. So by doing that, basically, it's just making sure that every transaction that was in your bank statement, on your bank statement, is in your bookkeeping software, and every transaction that's in your bookkeeping software is on your bank statement. After you do that, you want to properly categorize every single thing that you've purchased. So if you, let's say, for instance, you went out and purchased a vehicle, that's going to be categorized as a liability. I don't care how many people try to turn around and say it's an asset. This is long if there is an actual fee on it, like say for instance it's not paid off, then it would be a liability because it's a loan that you have. But it's also a depreciable asset because it's a vehicle that depreciates over time.
Exactly.
So it's kind of like a double side. So the same thing for food and beverage. A lot of people want to write off them going to Chick-fil-A for lunch. That's not a write-off. Your food and beverage write-off is whenever you actually have a business meeting with someone and y'all are sitting down discussing business. Like if y'all are at a restaurant, if y'all are at a coffee shop, then that's a tax deduction. If you just stop by Chick-fil-A just to get some food, that's not a write-off. So you need to go ahead and cut.
I'm telling you, everything I eat is a write-off. I'm the person that go, "Would you please?" The receipt is one burger. Like
exactly. Exactly.
Who else was there? Now, I do think, wouldn't that be an exception though if you're over the road truck driver?
If you're that's an exception. If you're an over the road truck drivers, they have a whole lot of tax deductions that they can claim. I mean, it's like 100 tax deductions, only because of all of the different memberships that they have, all of the different supplies that they actually need, from like their safety equipment all the way down to the electronics. Like they can get tablets, iPads, all of this types of things that they can actually use inside of the truck,
right,
or outside of the truck that they can actually write off.
Okay, and of course, Wednesday, 6 Central Time, truckers, wherever you are, we are going to take a super deep dive into your taxes and the different deductions that you will be able to have.
Yep.
Now, if there are, I guess, like 3 takeaways that people should remember, I know from my perspective, what level of control do you have over the individual that is performing work for you? If you have a lot of control, employee. If they can just frolic around into the deadline, independent contractor. Now, from the accounting perspective, what are some, takeaways that you think people should remember?
Top 3 would be employees equal tax credit.
Okay.
That would be one of them. Making sure that you take care of the back end of your business when it comes to your employees. Whenever you have an employee, just understand that there are employment taxes relating to them, whether they're part-time or full-time. You have unemployment taxes, you have their Social Security taxes, you have their Medicare taxes. And just the third one would be making sure that you're choosing, like you said, you're choosing the right designation for this person. If they are independent contractor, that's perfectly fine. Sign them up as an independent contractor, but understand that you don't have control over them. And understand that you need a W-9 form. Let me make that clear. If you are hiring on an independent contractor, they need to complete a W-9 form at the beginning, at the time that they start working, or even before they work. You need this W-9 form, just in case you end up paying them over $600. The $600 thing has always been in effect. That's not nothing new. $600. If you paid an independent contractor $600 or more, they need to get a 1099 NEC at the end of the year.
Thank you. One final thing for me to add: if you have an independent contractor, please have a contract. Okay. Woo! Make sure that something is signed. Yes, they can still skip out on the work. They can still do a lot of things, but it's going to be much easier to attempt to sue if you have a contract. Yes, contracts can be oral, them performing, specific performance, but that's a lot of legal terms that can say that there is a contract. The best way is to get it in writing. And I tell people, at the beginning of a working relationship, it's the best time to get whatever you want from the other side, because everybody's happy, everybody ready to do the work, all of that. Once something goes left and you're trying to unwind and get them to sign something, it's not going to happen. It's not going to happen at all. So at least you'll have that contract if you decide that you're going to go to small claims court, or, you get your judgment and then you're going to garnish your wages. But make sure that you have it in writing. And as people say, contracts can be on a napkin. If you don't know everything that needs to be in a contract, you can actually write a contract. If you end up in court, the judge, if it's stuff that's missing, they're going to use industry standard of what's typical in your industry for those types of contracts. But the most important thing is going to be term, pay, and services.
Yeah.
Okay. And who's the contract between? Make sure you know the parties and the signature, things like that.
Mm-hmm.
But just make sure that you do that piece first and foremost. Mm-hmm. I don't think that there are any questions.
Okay, there's one.
Hello, Jarrell. I hope I'm saying your name right, Mr. Alford. I'm just jacking up everything. But hello to you and thank you for joining and watching us. We are towards the end. So if there are any questions, even if we've answered it before, we can repeat. The session is employee versus independent contractor. If there's any brief questions, while that's going, if you can give us your information, give us a little bit about I know you have another notary course coming up. So if you can share that information, and remember everyone, I'm going to say this again, like the video, subscribe to the video, comment on the video, and be ready for the Zoom celebration. I have this Hennessy I learned how to make, okay? And I'm not even a Hennessy person, but I'm going to have me a Hennessy cocktail whenever I get, the Zoom stuff figured out, because I'm not, really good with technology. I'm still learning. But once I figure that piece out and people can join, we're going to just all sit together and have a good time. So Miss Fulton, if you can give us all of your information, and then I'll make sure to put it in the comments and description box as well.
Alrighty, so who am I? I am the owner of Top Tier Financial and Business Solutions. I do thank Ms. Ebony for having me on. But basically what I do is I do business consulting, tax consulting, and strategies and preparation. I'm also a bookkeeper, and I'm a mobile notary public, which is why she just referred to my Winning as a Notary Public course. Basically what we go over is how to turn your notary certification into a lucrative side hustle, which is turning your notary certification into becoming a loan signing agent. So in the course, it's not a course where you are a certified loan signing agent at the end, but I give you all of the how-tos that most people do not give you. So basically the resources that I can provide you as far as like coupons, supplies, office supplies, I tell you how to actually get into it, how to sign up with different companies, how to actually register your business, how to create your Google business page, how to use Canva to create your templates and stuff. I also go over how to make sure that your business is profitable. Because so many people get into the loan signing agent industry and they say, oh, well, I'm not making any money. I'm not getting any money. That's because they don't have specific parameters. So I teach you how to create those parameters and to price yourself accordingly so that you will actually make a profit whenever you drive out. You don't just want to drive an hour away and make $100. You're not profiting anything, because then you're printing out documents and so on and so forth. But these are the types of things that I go over in the course, where to sign up for, how to sign up and become a notary public, how to sign up and become a loan signing agent. I tell you what courses are great courses, what courses are not great courses. I tell you about how to, what supplies you need. So it's a lot that I give. I also do mentorships. I have a mentorship option as well, where I will go over any questions that you may have. And it is a live session. It's not something that's a webinar. It's live to where you're actually able to answer questions. The last one was about 1.5 hours to 2 hours long. This one will probably be the same, because I like to make sure I answer all questions at one time. And then once you're done, what you'll get is a how-to guide, basically everything that we went over, along with access to our exclusive group on Facebook, so that you can access anything that I put into the group, as well as a recording of the webinar. So that's our notary course.
Price
is only $29.99 for general admission, and to include VIP. Well, VIP is the mentorship where you get 2 1-hour sessions with me, and that is $99.99. And you can purchase all of that on my website at toptierfbs.com. If you want to check me out, check out my reviews, so on and so forth, I'm on all platforms, #toptierfbs.com or at toptierfbs. hashtag top tier FBS and at top tier FBS. Sorry.
No worries. And one final question. Do you still have time slots? I know you were doing free consultations for tax season. How are you looking?
I have a few time slots. Usually what everyone is doing is they book up the week, and then I have a full open week, and then they book that week up the week of it. So because I only allow 2 weeks in advance. That way I have some kind of control over my schedule.
Okay. Okay, well, I don't think we have any questions. We do not. I want to thank you so much for providing us with this information. I am pretty sure it's going to be helpful. Again, don't forget on Wednesday, we are going to be discussing taxes that are specific to the trucking industry. And then again, if you got anything, subscribe, comment, all of that good stuff. And I will definitely have a grant posted this week. I believe the dollar amount is $15,000. I know it's a minimum of $10,000. My goal is to post 2 this week and to, mix in a nonprofit. I'm trying to find an unrestricted grant for nonprofits versus one that's earmarked for a specific program. I'm going to start off with unrestricted. So then if you're starting up, if you have, administrative costs, that's going to be my starting point. And then as I get into more grants for nonprofits, I will do more programming, whether it's educational or mental health or children, etc. So be on the lookout for that. And if there is not anything else, we are going to check out, and we want you all to enjoy the rest of your evening.
Thank you for having me. Y'all have a great night.
Bye.
Bye.